Hey guys, Joseph Henson here with Henson CPA Group. We've been going live a lot lately, and one of the things we want to talk about this week is how profit is not the same as a paycheck. You can't go in thinking everything I'm going to do is the exact same. So before anything else, let's go ahead and switch to the slides. So again, profit is not the same as a paycheck. Rethinking owner compensation in veterinary clinics. Again, I'm Joseph Henson, CPA with Henson CPA Group. I thank you guys for joining me each and every week. And as always, any questions you have, feel free to send them my way. So one of the things we want to talk about is if you made $200,000 in net income last year, net income, so gross revenue can be $1 million, gross income can be $800,000, operating expenses $600,000, net income last year $200,000, but your bank account says otherwise. Where did it go? We've talked about cash flow before. This kind of goes along the same ways. So there is a common disconnect between your profit and loss and your bank balance. You want to look at your revenue, your expenses, your net income versus your bank balance. So you only have $35,000 in your bank when you should have $200,000. So let's understand the difference. Net income is your accounting profit. This is the profit and loss. Cash, what is actually in the bank? And then major cash impacts that don't hit your P&L. We've talked about this before. Owner draws, loan payments, asset purchases, and taxes. These are all items that might hit your bank, but not your P&L. There's different things here. If you're paying your personal taxes from your business, that's not related to the profit and loss statement. That's not related to your income statement. That is straight balance sheet, and that will kind of make your bank look lower than what you would expect to see. Common pitfalls in owner compensation. You are pulling draws without checking cash reserves. What does that really mean? So you are taking out $15,000 every month without knowing that you only have $20,000 in cash draws available to you, because of the fact that in your profit and loss, you're like, hey, I made $60,000 last month. That's great. Well, there's not always that common connection there. You have to be looking further in and digging into your numbers to see what do you really have, because not only can that take all of the cash reserves from your business, when it comes to taxes, you could now actually have to pay capital gains. Mistaking profitability for liquidity. Just because you're profitable does not mean you are liquid. You can have a lot of accounts receivable on the books, or even a lot of accounts payable. You can't just look at your profit and say, cool, I made $100 million last year. I get to spend $100 million this year. Yeah, that's an obscene number. Most veterinary clinics are not making $100 million. But scale it down to you. I made $100,000 last year. I made $200,000. It doesn't matter. It's the same issue. If you're outspending what you actually can make and what your cash reserves show, you're outspending your business. Forgetting to save for taxes. This is one of the number one items I've seen when people come to me. I made $100,000 last year. I wasn't expecting to owe $40,000. I spent everything there. Well, guys, we got to talk about that. Let's set aside a certain percentage of every dollar you make to make sure you're ready, and then not factoring in debt service. What does that really mean? You have debt in your business. We need to make sure you're factoring in the ability to pay that debt, so that if you have a balloon payment coming up on your real estate, you're able to pay that, or on the purchase of your clinic. If you had a 5-year balloon, so you pay 10% a year, and then 5 years in, you're supposed to pay the other 50%. You need to make sure you're planning for that and you have that debt service available. What compensation should include? You should have your base draw. So this is based on the business capacity. You should have a profit sharing model. You should make sure you're putting tax aside and plan for that, and then a retirement buffer or fund contributions. So base draw. Let's break down $150,000 worth of net income. So your base draw is $80,000. Your taxes are $20,000. You're at $100,000. And then you have debt payments for $15,000. So you're $135,000. And then you have reinvestment of $5,000. You're at $140,000. The rest are going to retained earnings. There's a huge difference here that we have to be able to account for. So one of the things you want to look at is potentially doing the 3-bucket system for paying yourself. You want to make sure you have operating cash, and this is going to cover expenses, including payroll. You want to have a profit bucket, and what's left after expenses used for bonuses or reinvestment. And then, as the owner, you should have an owner draw bucket. This is for regular, predictable pay. This is going to help you guys by preventing overdrawing and under saving within your business. It's one of the things that you need to start doing if you've just been pulling money out left and right, willy-nilly, no plan in sight. We want to make sure that what you take out works for you. So one quick example of that's going to be if you had $100,000 and you know you need $30,000 to operate for the next 2 months. Okay, great. That means you have $70,000 potentially to go ahead and put away for profit, to be reinvested, to pay out bonuses, and then an owner draw bucket. Let's go a little farther. Let's go 4 months. So then you have that $70,000. Let's reinvest $50,000. That would leave you $20,000 for the owner draw bucket. So $5,000 a month above your typical pay is going to come from that. $5,000 might not seem like a lot when you first start talking about it, but if you look at that, that's $60,000 extra a year. So there are some questions you should be asking before you take a draw. What is my cash position today? What does that mean? Your cash position is going to be, where is your cash at? Where is your liability at? Where are your short-term investments at? What revenue is coming in? Are there any big expenses coming up? Hey, my x-ray machine's been going out. I need to make sure I have $10,000 set aside in my cash reserve in order to pay for this. Otherwise, I'm gonna have to get a loan on this. We're looking at 10 to 15% interest, potentially 10 to 15% if we're lucky anymore. We need a plan for that. Have I saved for quarterly taxes? Made $100,000 last year. I need to make sure that I have around $10,000 for state and federal taxes this quarter. Next quarter, another 10. Next quarter, another 10. And is there any left? And is there enough left to meet my business goals? I want to hire another doctor. That means I need to save up a certain amount for a sign-on bonus, or I need to save up for more equipment because right now I don't have equipment to hire another doctor. Those are business goals that you can plan for and should before you make the decision. Tools to track your cash and draws smarter. Cash flow forecasting software or spreadsheets. So this will help you kind of plan those nice little dips, valleys, peaks, everything. And you're going to compare that to your net income. You want to have cash on hand. You also want to make sure you don't leave too much on hand and it's just sitting there. There is a fine line between what is available and what makes sense. If your income is going to be less in some months, you need a higher cash reserve than in future months. We want to plan for that. You want a separate tax savings account. This makes it very simple to say, I know every quarter I'm going to take out $10,000 to pay taxes, $20,000, $30,000, whatever it is. And then monthly reports that track your net income and cash movement, your profit and loss statement, your cash flow statement. These are two of the most important statements you can look at on a monthly basis along with your balance sheet. The accounts receivable aging, the accounts payable aging, these are phenomenal. These let you know how much room you have, but without having a good set of balance sheet, income statement, and cash flow statements, those don't help you at all. How will this impact your financial health? One of the things it'll do is allow you to avoid surprises during tax season. If you're already making payments and you're already planning to have to owe on April 15th, this will let you plan for that. You know what's going to happen. Instead of owing $50,000, now you owe $10,000. It's a huge help. It will reduce the debt from overdrawing. If you take out too much money, all of a sudden you have to go get more debt to service the amount you don't have. You spent $20,000 because, hey, I really needed a good down payment. I needed this. I need to upgrade. Great. You took that money. Now your business doesn't have enough to meet payroll. I have to go get a short-term loan. It's going to cost a lot more. It will improve your stability during your slow seasons. So during the winter months, if you slow down and you know this happens because people start to, hey, I'm going to plan this around Christmas. I want to plan around Thanksgiving. I'm on vacation. I can't do this. You will have more cash available to function and not have to stress. And then build a pay model that grows with the business. The next step is to evaluate your current draw strategy. Put a plan in place that will allow you to live a life you want without burdening your business with too much draws. Build a system that includes taxes, debt, and growth, and then get your numbers reviewed monthly or quarterly. That is extremely important. You can't afford to go yearly without looking at your numbers. You can't wait till April 15th to see how you did last year. You need to know yesterday how you're doing. Well, again, I thank you guys for joining us today, and we're always here to help you make smarter decisions about your compensation and cash flow. If you have any questions, please feel free to email me, Joseph at Henson CPA Group. On our website, hensoncpagroup.com, you can actually book a free discovery call